Welcome to our CYA Condo series, the top 20 questions to ask when purchasing a condo. I'm Lori Greenlee. Before we get started, don't forget to hit subscribe so you can stay up to speed on all condo news and education. We've been looking at the 20 most important questions you should have answers to when it comes to purchasing condos, whether you are representing yourself or looking for an experienced agent, so that you know what qualifications to consider in your search. Today we are addressing what I consider to be the most important of the 20 questions, the final 5 questions, numbers 16 through 20. These 5 questions talk about the HOA, and if you've been following us, you know the HOA is a business that you are purchasing into. So the due diligence required is the same as the due diligence you would do in any business purchase, especially because this business owns a large asset, the condo building itself. The tough part is you are on your own when it comes to the HOA and the building because a realtor is not permitted to guide or discuss this part of the sales transaction with you, since it is not part of the actual real estate transaction. Only the condo itself, those 4 walls, is considered the real estate, and they will be there to assist you very well with that, but you are on your own when it comes to the business, the HOA, and the asset or the commercial building that it owns, the condo building. This is why I continue to say we have a missing fiduciary in the condo purchasing process. So here we go. Question number 16. What are the monthly HOA fees and what do they cover? HOA fees are based on the cost to maintain and manage the property, with an additional amount that is held back for potential litigation and major repairs. Make sure you review these fees, understand exactly what is included, and talk to your banker to ensure you can afford the additional payment each month when it is considered with your mortgage payment, along with taxes and insurance. As an FYI, this fee is not tax deductible like the interest on your mortgage might be. You will see the budget split out into at least 2 places: the operational budget, which pays for all of the current operations, and the reserves, which is a fund set aside for major repairs. The most important part of the budget today are the reserves, because if they are not funded properly, you could get hit with very large special assessment. The only way to know if the appropriate amount of funds are set aside is to review a current reserve study, and then make sure those reserves are funded according to that study. Fact: only 30% of all buildings in America are working under a current reserve study. Another fact: less than 20% of all buildings are funded to cover any potential repairs or replacements according to that reserve study. Another fact: condos are commercial buildings that should expect to need repairs or replacement of major components around years 30 to 40. A very important fact: condos in America started in 1960, and 50% of all of our condos in America were built 30 years ago. Question number 17. Understanding the HOA balance sheet. Is it healthy? Ask for a record of monthly HOA payments received from existing homeowners. The association usually won't give a buyer copies of these records, but the seller can request them and provide them to the buyer. You will also receive official copies of this information from the title company during your due diligence period, but that time frame is very short and you will have a lot of information to cover by yourself. Remember this. So anything you can look at before purchasing or making an offer could possibly save you time and a lot of heartache. You will want to ensure the delinquency rate is 15% or less, or you and your neighbors will end up having to cover the shortage to pay those expenses. Remember, the HOA is a business, and the condo owners make up the HOA. They are the owners of that business, so they have to fund shortfalls like any other business owner would. Buyers have little chances of getting financing in a building with a high percentage of owners who are delinquent on dues. Fannie Mae, Freddie Mac, and the FHA, Federal Housing Administration, which buy or insure most mortgages, do not approve condos with delinquency rates above 15%. This delinquency rate may not seem like a big deal if you are paying cash, but remember, when an association is short on cash, it has to make cutbacks. Those cutbacks could be for upkeep on the grounds, security, the fitness room, and ultimately, even though you paid cash, if your building isn't approved for all those types of loans we just talked about, it could affect your ability to sell because it decreases your buyer pool. Some associations also may charge unit owners special assessment fees to make up for a budget shortfall that results when dues aren't paid. The most important parts of that budget include the total amount of outstanding debt owed to the association and the percentage of owners who are not paying their dues, as well as that reserve study and those reserves that we keep talking about. Question number 18. Are there any current or upcoming assessments? If there are any current or upcoming assessments, make sure you determine who will be paying for those, you or the seller. If you are responsible for the fee, it could be substantial enough that it could affect your ability to get a loan, or maybe it's an additional fee you aren't willing to pay and you want to try to negotiate. If an assessment has been approved by the board, most states require the seller to disclose it in the sales contract, but not all states. The HOA could be talking about an assessment that hasn't been approved yet, and it finally gets approved a week or so after closing. You then are 100% responsible for that unknown assessment, which is why reviewing 12 months of meeting minutes in detail is very important. You should be able to pick up on discussions about potential assessments and then ask questions before committing. But remember, whatever you are told is not official, so you are still taking a risk. They could tell you it's possibly a $20,000 assessment, and it ends up officially being a $70,000 assessment. The only way to know the real answer to this question is to review a current reserve study and to make sure the reserves match the recommendations of the study. Without the reserve study, you have no way of knowing about the condition of the building, the age, and cost to repair or replace those components. Without reviewing a current reserve study, it also means you don't know the value of the condo you are purchasing, because if there are potential assessments around the corner, that is an additional cost to incur that you might want to deduct from the cost of the condo, just as you would if you were purchasing a single-family home and you knew there were age components on the inspection report that you were going to be responsible for. Here's an example. Say there is a surprise assessment of $90,000 per condo around the corner that you don't know about, and the condo you are purchasing is $450,000. Wouldn't you have valued this condo at $360,000 if you knew about this assessment at the time of the purchase? Look at it this way. If you were purchasing a single-family home for $450,000 and an inspection told you it needed $90,000 in work, wouldn't you negotiate the price or walk away? Look at that inspection of the single-family home the same as the reserve study. Question number 19. What does the HOA master insurance policy cover? Your lender will ask for a copy of the association's master insurance policy. It is not their responsibility to advise you on what is covered and not, but they will let you know if coverage isn't sufficient enough for their loan based on their underwriting requirements, and it could affect your opportunity to borrow. One of two things will have to happen. You will either have to petition the HOA board to make the changes, which could take months because it is likely a vote will be required, or you will need to seek out a new lender and start the loan process from scratch again. Either one could affect your contract. If you are not using a lender, please make sure you still obtain a copy for yourself. You will want to make sure the estimates stated to rebuild are not outdated and are accurate. It might be a good idea to ask your personal insurance agent to review with you. Your agent will help you obtain your personal policy based on what is and isn't covered in the master policy, since the master policy only covers the structure of the building and usually nothing within your walls. Another expense to consider. A special note, ask your agent about loss assessment coverage. And finally, question 20. Are there outstanding or past lawsuits you should know about? Understanding the history and current status of any lawsuits the community has been involved in is important because it could affect a buyer's ability to get a mortgage or even a current homeowner's ability to refinance. Sometimes it sounds enticing when an HOA is approached by someone who says they can help the HOA come up with a chunk of money through a lawsuit, maybe by suing a contractor for a defect. There are times this makes sense, especially if it is a safety issue. But have you heard of ambulance chasers? Beware. Lawsuits can prevent owners from selling because banks aren't interested in being part of a condo in a building that is in the midst of a lawsuit. Remember, lawsuits are not ever quick and painless. They can take years, no matter what promises of quick, easy, and slam dunk are made to you. Once the ball gets rolling, it's rolling. Even if the HOA isn't paying up front for legal fees, it will cost. Visit us at cyacondos.com and click on our Condo Concierge page. Here you'll be able to see the many ways we can help, from consulting to representing buyers and sellers, supporting agents, training, educating, connecting and collaborating with anyone who works in the condo industry, and referring the best of the best in the condo industry to help you enjoy your condo living, buying, and selling experiences. Also, don't forget to hit subscribe to keep updated on all condo news and education across America. Thank you and have a great day.